Good day. Welcome, everyone. In the next episode of Inside Crypto, where from a hedge fund's perspective, I present to you my assessment of the crypto market, primarily of the two main cryptocurrencies, Bitcoin, which I refer to as my gold, and Ethereum silver. That's how I coined it somewhere. Such a comparison to traditional markets from Wall Street, because Bitcoin is evidently more associated with a safe haven, if you can call it that in the cryptocurrency world. But look, recently it has very well confirmed my thesis. Look, the entire crypto market was plummeting and Bitcoin held its ground bravely. Relative strength, enormous. Bitcoin confirmed my thesis that it is more of a, well, such a equivalent of gold in the crypto market, where it is more associated with defending the value of money over time. And I think that Bitcoin's role in this direction will become increasingly significant. In the long term, I think the volatility will decrease and Bitcoin's stability in this regard will increase. In contrast to Ethereum, which I often compare to silver. Why to silver? Silver is very much associated with, it obviously has the factor of maintaining the value of money over time, but it is much more important because of its industrial factor. Silver has a large application in industry, just like Ethereum, which has a large application in various cryptocurrency projects, different layer 2 networks on Ethereum, such as Arbitrum, known from my project, Brightpool.Finance. So there's something for everyone and plenty to play with. There is enormous liquidity in these two cryptocurrencies, and they set the direction for the entire market. Bitcoin sets the direction for everything. Ethereum, more for alts, but also for the real crypto, for projects that actually do something. And let's see what happened a week ago, a summary of what I talked about a week ago. We identified two supports. I mentioned that hedge funds might have been tempted to go down and liquidate positions around $83,000 and $77,500. I mentioned that this is a good level to enter long positions. The first level already halted the declines. Look at how beautiful this support is. Well, a lot of, isn't it? Isn't this better than analysis? Technical. Answer for yourselves, looking at how beautifully it works. And here we have a look at the next one more very important thing, because we didn't mark this on the chart, but a week ago, a huge amount of information on Twitter about a massive whale, liquidation at 94,000, a huge short position to be liquidated, and also, as is often the case, at such times, hedge funds couldn't pass up such an opportunity. The whale was swept away, 94,000 was definitely touched, and that's why there is resistance here now. As for the next week, well, here we also have an interesting situation on the buying side. Again, once more, these liquidations significantly exceed above this line. Above this line of demand, I always point out to you that if these liquidation lines do not significantly protrude above the demand line, it means that whoever wants to manipulate there will encounter a lot of competition, many eager to enter these positions. I assume that it is a certain reflection of those interested, probably not everything, but it is a reflection of the interest, the demand at these levels. And these liquidations must be significantly above to be worthwhile to perform this manipulation. And here we have the first support around 91,800, the next at 89,700, and another at 86,600. These are three levels that hedge funds might be tempted to target. And since it's arranged in a cascading manner, it's extremely tempting, because there could be a cascade here. I wouldn't be surprised if there was a hit up to around 87,000, but if we reached here, I would start entering long positions. And perhaps even here already, though I'm not sure if they will. Well, we have 2 weeks until the next program, so maybe in 2 weeks, 87, well, 89 is probably a bit safer. I would set cascading long positions here, and the deeper, the larger. And in the other direction, well, here it's beautiful. I would be very surprised if the market doesn't hit 95,000 here. The temptation is simply gigantic to pull down all these liquidations. Sorry about that. At this level, around 95,000, it will pull like a magnet. So beautiful levels to play, and it rarely looks so obvious to play. So probably at 95, one can already be tempted to take short positions because I'm very, very bullish currently towards the market. So even if we have short positions at 95 later, it would be advisable to close them at 91 too and enter long positions at 89, 90, and later at 86, 7, unless the market first goes down the other way. Then we would need to accumulate long positions here and discard them. Everything here. And upon a breakout, renew those positions, just as I often show you in the program. And what happened with Ethereum? With Ethereum, it was a bit different. The first level didn't work at all. The market pulled back more. But the second support definitely worked. This is the support. Here. However, as you can see, it wasn't as evident. How is it now with Bitcoin? And looking ahead with Ethereum, a similar situation when it comes to playing upwards, 1800, 1830. Well, I would be surprised if the market doesn't test this again, a large number of positions to clear. It's arranged in a cascading manner, although there's not much excitement with these liquidations either. But due to my bullish outlook, I think it will be possible to gather liquidation around from 1790 to 1830. Entering short positions makes sense, and entering long positions also makes sense because, as I said, I have a bullish outlook. Around $1,600, it is an opportunity. 678. I think it's realistic to achieve, and I would also enter long positions here. But in my opinion, we are in a bull market, so I wouldn't be surprised at all if it was around 1715, 1730, where I would set long positions. Then that's all for today's episode. Thank you for your attention. See you in 2 weeks.